Hello traders, welcome to today's video. It is Wednesday the 22nd of May 2024. This is your Bitcoin, Ethereum and cryptocurrency market update for today. So we're going to start with Bitcoin again. We did start with Ethereum yesterday because that had the big move, but things have settled down somewhat, gone back into a bit more of a calm and stable trading environment, and there are some nice levels to be looking at. So starting off on the high time frames, of course, Bitcoin last month did have that bearish engulfing candle. Well, it engulfed the body of the previous month, and then we're getting a similar candle, the reversal of that this month. So a really good reaction in May so far, and we have so far tested the previous month open and having a little bit of a rejection from there so far, but managing to hold. And I think things are looking fairly decent on these higher time frames. I am expecting this to end up looking like this, and for us to be going on the next run within this bull market. Switching down onto the daily, this is what I mean. We had that rejection yesterday, so price came all the way up and tapped into that monthly level. It is also a weekly level, and then we also have that second highest ever daily close on the candle, or untapped daily close, that we are also seeing as some confluence there. And then if you're going from high to low within this range, we have that 886, like the final big boss of the Fibonacci levels in order to get through before we see new all-time highs. So what we're seeing right now, correction similar to what we had last week after the first impulse up, as long as we are holding within the kind of exact area that we're holding right now. I am expecting this to push on to new all-time highs. Now that could happen today. We do have FOMC minutes today that will cause some volatility. So I am expecting a move today. Now, if we go up, I think that move would lead us close or maybe to or close to all-time highs. If we do drop down, we are looking at this being, a pretty heavy rejection. We'd be looking back down at that point of control there, $66 to $67,000. I don't really want to see that happen, because then we start looking at these deeper retraces all the way back down to 63. You want to see this area hold. You want to see these shallow retraces and to get that continuation higher. Of course, legacy markets are at all-time highs. They are very bullish right now. So you would like to see that continuation from the likes of Bitcoin and Ethereum going into today. Like I say, like I've said before, you don't want to be giving longs that much opportunity to get in. Let's keep the retraces shallow, and then let's get that continuation higher. So where we are on the daily as well, the support that we've got, so we can see that we had that nice impulse through that closed above the gap that we have on the daily time frame, this being the only one that there is that was above us. Of course, it's created some big gaps underneath, but if there is momentum, then that should get continuation. And so far it is holding this. So unless we're seeing daily closes back below 69, essentially, then I am expecting continuation higher. Daily closes below, 4-hour closes below, that's when things start to look a little bit sketchy. But if we go down onto the 4-hour, we can see that this is still holding. So there's a couple of little levels. There is like a wick low on this 4-hour candle here that lines up almost perfectly with that previous all-time high, that 69K level. There is a possibility that it could dip into that and get a bounce, but I don't necessarily think that needs to get cleaned up. This is a pretty efficient move. If we do start going down here, then like I say, I am expecting that move down. Weekly open, that range POC, that 66.5 to 67K zone to be hit as a target. But really, the interesting stuff, because conditions have settled, is on those lower time frames. So here, once again, you can see we had a relatively, although it was fairly impulsive and fairly quick, it was actually quite balanced the whole way through. You can see both sides trading this. Okay, wicks on either side of the market here. Consolidation and then a big impulse. We have corrected that final big impulse up. That has come down, taken out the ledge that created. And we are then seeing a bounce from here. What we also had as confluence was our weekly VWAP. All right, so we have from the weekly open here, we are clearly bullish on the week so far. All right, we're trending up here. And that weekly VWAP you would expect to act as support and to send us to new highs. So the only resistance we have here locally really is this daily open. We had one of those nice spike down, spike up, and then you get the continuation. after the daily open, and then if we can flip that, if price can just flip above that daily open, I would be expecting continuation to, at the very least, to take out these highs. Okay, and then maybe later on today we go for these highs, and then it becomes a case of looking at that bigger all-time high afterwards. So still remain with a bullish bias here, looking for higher unless we see closes below that $69,000, in which case we likely come and retrace the entire move. Just going to go onto the Woo chart here because this shows something a little bit different, and I'm going to switch this onto the TPO. And I did share this on Twitter and within the Discord. Of course, if you would like to see all of the trades that are being taken, and you want all of the educational content on these type of charts, then you can go and join the crew where we do live trading on a daily basis. We've just done another live session today with the NASDAQ. And we are always sharing ideas and setups there. There's been a couple of trades that have been taken today already. And for educational content, you can learn all about TPO. You can learn all about market structure, order flow, all of those type of things. Link is in the description below if you would like to come and join the crew and trade alongside a community of very professional, lovely traders. But anyway, I did share this in public as well. We were looking at these ledgers. So we've got a few TPO ledgers here. And they act as just a draw for price action. Like you want to see these cleaned up. There's a few of them on the chart here where we have this. This is fairly balanced, but you can see 1, 2, 3, 4, 5, 6, 7, 30-minute candles with this ledge that this does create before getting a move up. So if we are going to see acceptance back below, then that leads us to the next level, that 66,500. As I've said previously. But what we saw yesterday, this was the main level of confluence that we had. We had that anchored VWAP, and we also had this TPO ledge here that we wanted to see cleaned up. You wanted to see those TPOs cleaned up before getting a move higher. And what we have back above is if this does hold, then that leads us into this, where once again we've got this ledge here that has been created with this high above here. So if we just contract the blocks, then you can see it a bit clearer. All right, so a big ledge down here, a ledge here, a ledge here, and everything else is being fairly balanced. The lows that we've put in so far, like they're okay. They're decent enough. You've got single TPOs at the bottom of the last couple of days. Now it's not like, there's enough of a like wick to these daily profiles to make us feel okay. Like it's not the most excess at the low. Like today looking a little bit stronger, like a nice move down, quickly recovered, continuation higher, and the same with this high. So you've got decent lows, you've got decent highs, and you just follow the trend in this case to be looking for higher. Previous day point of control up here at 71,150, 71,200. And then there's the point of control that we've got on Monday down here at 67. So these are levels to bear in mind. But I think slightly overcomplicating things if you're looking at all of this. Just go for where the liquidity is and follow the trend at this stage, unless we, like I say, see closes below 69 equals bad. But as long as we're holding, it equals good. We'll move over onto Ethereum. Okay, and we'll take a look at Ethereum. I don't want the TPO for Ethereum. Let's just have a look at this chart here. So it's very, very simple. On ETH, this was the long that was taken last week. It came up and took out the highs. So some pretty significant highs, and holding above here, bullish. You don't want to see this local market structure start to shift. I think if it does, and we start to break down here, taking out like these lows that we've got on the 4-hour candles and closing below, then that leads us to a high probability that we're going to see a move down to around about that 3,400 zone. I think if that was going to happen yesterday, there was better confluence for it because we had that VWAP that was acting as support at this stage. If this does start to roll over here, Bitcoin actually looking a little bit stronger than Ethereum today. This is looking slightly toppy, but of course, if Bitcoin does hold and get that strength, then that can always lead Ethereum higher. But yeah, I'm completely fine with a move down to around about 3,400. What I don't want to see is acceptance back inside here. These arrows are annoying. I don't want to see acceptance below that, and I don't want to see this entire move recovered, because as soon as you start seeing time spent back below that 3,400, it's a very high probability that we come and take some of these lows as well. There was a big increase in open interest when we had the move up. There are certainly a lot of short positions trapped in this area. You don't really want to give them an exit. You want to keep on pushing at this stage, and also not give longs who are sidelined that much of an opportunity to get in, because as soon as that opportunity is given, then the market naturally will want to punish them and stop them out before continuing maybe higher afterwards. So that's the main stuff on the chart here. In terms of order flow, if we just have a quick look at the CVD, then this is on Bitcoin. We can see that perps is still slightly leading this move. So there's profit taking going on within spot. That's a bit of a shift to what we've seen over the past few weeks. But of course, we were at the lows of the range and everyone was super bearish and scared last week. And that was a good opportunity to buy. Now we're right back at the top of the range here. It is natural that you want to see profit taking happening. We did get some bearish divergence yesterday that has since just calmed down. And yeah, Delta's looking, I think, as you would expect it to. We do actually have some bullish CVD across both. So you can see the low that we put in here last night, the higher low that happened soon afterwards, overnight once again here. So this was towards the end of the day yesterday, and then overnight where we've got a decent low that's been put in. You did create divergence against those lows, so there was some aggression shown, seller aggression shown here, but it wasn't able to break price down, still holding this zone, and that's why I think looking for higher at this stage is still following the trend, still able to look for higher prices. With this, we know the spot premium has gone, and naturally because this was majority perps led, you're going to see this, but it is starting to cool off somewhat. What we've also seen from the ETFs, a little bit back and forth here, but what we've also seen from the ETFs is this premium that there was in relation to the net asset value that has cooled off. So we were looking at on some of these on IBIT, for example, ARC, people paying 1.2% above fair value for Bitcoin on May the 20th. Now that was on Monday when there was the big move up, and then yesterday that did cool down. So that premium's gone there, and it's just looking a little bit more settled. Overall with the ETFs, big inflows from IBIT, but nothing really from anyone else. So that's kind of interesting there. And what else do we want to look at? Yeah, Ethereum order flow. This is what I say about not really wanting to, I just don't want price to come in and allow an exit for the open interest that was created within here. So I would like to see this zone hold. Even if we do get dips into that, I would like to see the majority of that zone hold. Now, the reason being, you can see here with price just grinding down, okay, but open interest grinding up through the majority of the last couple of weeks here. There was positioning taking place. This pop that we had came through a bunch of sell limit orders who are now trapped. And you can see this quite clearly on here, where you have, we'll zoom in. You can see that we've got this negative delta coming down. All right, you get the pop in open interest, which it's a lot of buying at market, but that's filling a ton of short positions that are also at limit there, and then giving basically opportunities for shorts to enter who are now trapped. So where you do not want to see this going is here. All right, it can dip slightly into that, but you don't want to be giving these guys that have been caught offside that chance to exit if this is going to be truly like a bullish move, and we're seeing continuation higher. Now, another thing that is interesting here, the move up was done or able to be done on relatively low volume. In fact, because the books were thin. Okay, yes, you had these limit orders that were here and here, but the books were relatively thin. Now the exchanges have increased liquidity because it was a bit of a shock move. It wasn't maybe exchanges weren't entirely prepared for it. So you saw that big spike in open interest. Now the liquidity is here and the price is being contained here. So it's going to be much more expensive. It will cost a lot more money to push price back down to this, like these low 3000s, than it cost in order to push price up to this level. It's much cheaper to go higher. Okay, so if you're a market maker, if you're positioned here, the path of least resistance is higher, right? And that is where I would ultimately like to see this going. If this does drop down, it will need to be aggressive. It will need to be an aggressive move that just eats through all of this, and it will be costly for any participants that do it until you get that unwinding, okay? Because you may be in a situation here where you've got a lot of long positions opening, and if they're still holding on and holding on and holding on and holding on, then when you start to hit those liquidations, that's when it can cascade. But it's a costly move to start now because of the liquidity that has since built up. But that's going off on a bit of a tangent there. Overall, I think it's looking okay for Ethereum. And yes, okay, we can dip, but we don't want to dip too low. And then we do want to see some continuation. I don't think there's too much greed here on Ethereum right now. I think most people are sidelined. So yeah. On that note, I think I'm going to wrap it up. Please do hit the like button, subscribe, all of those kind of things. And I'll see you in the next update. Cheers. Bye-bye.